Good day, I'm Chata, your accounting tutor. It is a continuation or the completing aspect of depreciation, how it is charged in the statement of financial position, or how it's charged in the statement of profit or loss. This is how depreciation is used or is treated in statement of profit or loss extract. Under statement of profit or loss, mind you, I told you that depreciation is an operating expenses. Depreciation and operating expenses. So as you are preparing your statement of profit or loss, don't forget that when you come under operating expenses, pick what is called depreciation of the current year. And the emphasis here is clear that the depreciation that is charged in the statement of profit and loss under operating expenses is the current year depreciation charge, which is based on illustration is the 140,000. That's the one you calculate in the current year, not the one that was given in the trial balance as accumulated depreciation. That was already charged in the older accounts, have been borne as an expenses. So the one that is charged based on matching concept in the profit and loss statement under operating expenses is the one that is calculated or given in the current year. So in the case of illustration, 140 is the annual depreciation charge in that year. So that is what will be used as an operating expenses. But look at what I've put in this working. Accounting places emphasis on working. So any amount you work outside as a working or you demonstrate outside, they have to come and show the examiner that if you refer to examiner to working one, that going to working one, as you can see, this is working one, you discover that under working one, you will discover that we work it out and we're able to get 140,000. So as you come to use it into the financial statement, you must demonstrate and tell us that if you go to working one, you will see where 140,000 was worked out to get it, because 140,000 was not given anywhere in the question. So you must tell the examiner or the person looking at the work that this is how 140,000 have been derived, and that is why you have to indicate working one. Then let's go to statement of financial position. How do you use depreciation in statement of financial position? Depreciation, you already know that depreciation is occur on non-current assets. So it means as you bring your non-current assets, they must be affected by depreciation. So look at the question. One of the non-current assets was motor vehicle. The cost, or look at the heading, we have the cost, we have the accumulated depreciation, we have the written down value. So here, the cost of the asset is 1 million. Then coming here, you pick what is called the accumulated depreciation. So the emphasis here is, here you're not just using the 140,000, but you're taking the 140,000, which is the current year depreciation, and you add it up with the previous accumulated depreciation to get the total depreciation from the beginning of the assets when it was purchased till date. So if you add it up, you discover that this is 140,000, as the proof was found in the provision for depreciation account. Look at the previous year depreciation profit at 300,000, added to the current year depreciation of 140,000, then you get a total of 140,000. So it is the 140,000 that is the total depreciation accumulated for motor vehicle from the time it was purchased till date. So that is what you are going to bring in the statement of financial position. Not just the accumulated depreciation, not just the current year depreciation, but you must match it up to get this. And by the time you subtract the depreciation, the accumulated depreciation from the cost of the assets, you get the written down value of the assets. And that's how you now work it out for all the assets that have depreciation. If the furniture was demonstrated, it's going to be the same thing. You bring the furniture, you bring the accumulated depreciation, they also get the written down value. And this is how the depreciation is. And if there was, for example, if you have only the depreciation that is charged in the current year, mind you are going to bring it here. If you have only the accumulated depreciation, mind you are going to bring it here. But if they are two, whereby you have both the current year and the previous year, which is the accumulated depreciation, you must add it together to get one figure, which will be subtracted from the cost of the assets to give you what is called the written down value. This is how depreciation is handled in financial statement of a sole trader. It is very straightforward. If you are able to follow my class, mind you, there's no question under foundational accounting pertaining depreciation that you will not be able to handle it. Don't forget to follow me all because I still promise to handle other adjustment. We see what is called allowances for discount. We have drawings and we have other adjustment that I'm still coming to treat them here. So don't forget to like, share my video, ask question, comment so that we know your problem to come back and address it at the appropriate time. I remain Chata, your accounting tutor.